Bobby, we've been talking for about 5 minutes, and I'm like, this is a cool day. Like, I am so excited to hear more of your story and everything that you do for people, especially around the topic of taxes, um, which I think some people are like, ugh. And I cannot believe we even have you here on April 13th. Like, do you need to go sleep or anything? um, but one thing I want to do before we get started, I never read bios of our guests, like, just because I think we lose people with that. But I just need to say why you're different with everything we're talking about today. And it is from your bio that was so interesting to me. So I'm just going to say he started, bought, and sold companies in multiple countries. So his stories are grounded in hands on learning, not just theory. He has also spent time actually living in 10 countries and traveling through more than 80 while building fully remote businesses. So he's not just talking about location independence as trendy, he actually lives it. He's all about showing practical steps that help solopreneurs design their business lives around freedom, compliance, and actual profit, not corporate templates. And I was like, oh, Bobby, welcome to the show.
Yeah, sounds like a life first business to me. I'm assuming you like traveling.
Yeah, I love traveling, and life first business is a good way of putting it. And it wasn't always like this. Like, so I've never actually had a real job. I've had my own business since I was 19. Like, I've never had a professional job. I said I've never had a real job. I mean, I've had jobs like as a kid, like I worked at the grocery store and the go-kart track and unloaded trucks for UPS and stuff like that. But I've never had a professional job. So for me, like, I always hear people say, oh, I had this corporate job making $250,000 a year and I quit to start my own ice cream shop. And I'm thinking, like, you guys are nuts. Like, that's crazy. How do you give up like that lifestyle to switch? I just never had that. Like, I don't even know what that would mean to like have a corporate job. I would be completely an unemployable human at this point. If I lost, like, if everything burned to the ground tomorrow, I mean, I would probably just be homeless. Like, I don't think I could actually have a job. But so to your point, life first, it wasn't always like that because I had a company like in my 20s and early 30s. I mean, we had an office and, all the normal things. But I had I had a couple of big defining moments that happened around 2006 and 7. And, I won't go into all the detail. One of them was a motorcycle crash where I almost died. I was in a coma for about a week. And you hear this story all the time, like, oh, I almost died and I rethought my whole life and blah, 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 this stuff. Well, yes, I did. I actually went on a camping trip by myself. I call it camping. I took an RV. I took my RV and went to Outer Banks in North Carolina for a week by myself and did a reflection week on, what I wanted, what I didn't want. And I realized a few things. Number one, my old businesses, I hated them, hated my customers, hated my employees, didn't want anything to do with it. Just hated everything about it. So I said, I'm going to sell all these businesses and do what I want. And during that week, I kind of reflected on and journaled about, wrote about, meditated, whatever you want to call it, on what I want. So, Joe, to your point, how did you put it? A life first business?
Yep.
And so that was one of those moments where I realized, like, I looked at it. I really like your term, life first. I actually came up with this analogy, sitting on the beach in Outer Banks, camping, and I came up with the analogy of a dartboard. So, a dartboard has like the bullseye, and then you have the rings around the dartboard, right? And so I came up with this analogy that most people, almost everyone, myself included, had spent a long time with my career as the bullseye on that dartboard. And so what that means is the career is the most important thing in the structure of your life. And then everything else becomes like a ring around it. Like where you live, where you go on vacation, where you eat lunch every day, like what your hobbies are, all these things. Like if you live in Colorado, snow skiing might be a hobby. If you live in South Carolina, golf might be a hobby. You know what I mean? So like geography plays a huge role in the way your life is. And if your business is location based, you're in a geography that determines what your life looks like, right? And I realized I came up with that dartboard analogy back in, I think this was 2006 or 7 or something like that. And I no longer wanted my career to be the bullseye. I wanted the lifestyle that I wanted to live to be the bullseye. And I wanted my business to be a ring. And my business had to fit my lifestyle instead of the other way around, if that makes sense.
Makes total sense.
And one of those requirements was I wanted to be able to live and work anywhere in the world because I had been traveling a lot. I've got the travel bug big time. I still do. People ask me all the time, hey, don't you think you're ever going to settle down? I'm like, what are you talking about? I am settled down. I have 3 homes. I'm settled down in 3 places, like 3 different countries. That, to me, that's settled. That is what settled Bobby looks like, is having 3 home bases and only traveling to like 10 or 12 countries a year, because before it used to be much more. So yeah, and I built everything from that point forward. I designed the business to suit my lifestyle that I wanted to live. And there's a lot of things that go into that, but we only have 45 minutes to talk about it. But everything, that went into what I wanted my life to look like, you always hear like, what's the perfect day? People talk about the perfect day analogy. And, I said, this is what I want my perfect day to look like. And I'm the kind of person that this is my perfect day today, but hey, maybe Wednesday I want to go to Buenos Aires, and maybe I want to stay in Buenos Aires for 2 weeks. Maybe I decide to stay for a month. Maybe in July I want to go to Thailand. And that's what I wanted my life to be. And I didn't want to have those geographical boundaries or restrictions that said I couldn't do those things. And I knew, my work had to fit that.
Yeah. I'm like entranced by your story right now, and just how I was a digital nomad for 5 years. So anytime somebody's like RV, or because that was pivotal for me, I knew at that point, like, I wanted to be fractional and I wanted to be able to design a life first. So question for you. So you do a lot of international work, and it sounds like you figured it all out, but what were some mistakes you made along the way, that like cautionary tales for people that are thinking about doing what you want to do, maybe going place to place, 1 country a month or something? What would you tell them to be mindful of before they make that leap?
So a couple of points. I was a digital nomad before that term existed. Digital nomadism, in my opinion, maybe I'm wrong, but I think I'm right. In my opinion, kind of started around the invention of Skype. So Skype was invented, I think, in 2004 or 5. Prior to Skype, it was very difficult to be a digital nomad, especially like a solopreneur, and you make decent money, but like you're not working for $1 billion company that can pay your $3,000 a month cell phone bill, right? Like, you don't have an expense account to pay your $3,000 a month cell phone bill. And prior to Skype, that was reality. If you traveled a lot, your cell phone bill was like $3,000 a month. Because I don't know if you guys remember back then, but if you traveled and you used your cell phone, if it even worked, it was like $8, $9, $10, $15 a minute to use the stupid thing. And so Skype came along and just eliminated all that. You can have video calls with your friends, your clients all over the world, and people are like, I'm not restricted anymore. And it opened up that world. And now, we have like all these technologies that allow us to do this. And then you also had the book that came out. You guys have probably read it or at least heard of it, the Tim Ferriss book, the 4-Hour Work Week.
Oh, yes.
Which talked a lot about like working remotely and how to, build systems for small businesses and stuff. And so the digital nomad movement, in my opinion, started roughly 20 years ago. And like, I think it's been wonderful. Like, I started about the beginning of that time. Like, I remember I didn't have Skype at first, and a friend of mine in Russia introduced me to Skype. I'm like, oh my God, this is amazing. I started using it pretty early. And to your point, some of the mistakes I made, I mean, I'm an entrepreneur. Our entire life is to go from mistake to mistake, right? I mean, that's all we actually do. Like, that's what it means to own a business. Like, all you do is try to fail forward to the next mistake, and hopefully you you progress forward and you fail better each time, right? Like in entrepreneurship, that's the whole name of the game. But as far as like moving, I mean, digital nomads too have kind of a range of definition. Like if you ask like the hardcore, 23-year-old solopreneur or somebody that has a remote job was a digital nomad, and that would be like a person with no home base, and they live here for 3 weeks, and they live in this hostel for a month, and then they, go live in this work stay place in Vietnam for a month or something like that.
We have
And
some
then
of those. We have some of those in our group. I mean, they just don't have a home. They just go
Yeah.
from place to place. Yeah, tend
That
to be
would
younger.
They tend to be younger. They tend to also not have real businesses. They tend to be more the solopreneur type. They tend to have like a remote job or something like that. For the
Wait
most-
a minute. Wait a minute.
Wah-wah.
You say that solopreneur isn't a real business?
No, when I say a real business, I mean they're not building. A solopreneur is somebody who works, and I'm not disparaging it. A solopreneur is somebody who works and they are the business. They are the business. Okay. When I define a real business, I mean you're building a company with systems in place where you can step away from that business and you
Say an
don't have to.
employee-based business.
Yeah.
Employee-based business. Okay. Yeah.
I don't really call it employee-based, but systems-based business, where you have systems in place where things happen without you having to do it. Okay. And there's
Just for
nothing wrong with that.
clarification for the listeners, we are encouraging our solopreneurs to build systems, just like you're describing, in
Yeah.
order to have a business that they can maybe not walk away from, but at least not be, engaged in making the thing, turning the crank on it 24/7, 365. So we are really encouraging solopreneurs to think in the context of what you're saying is a real business.
Yeah, and we live in the greatest time ever in humanity to build these systems in place right now. My God, look at what you can do with AI tools right now. Like if you just dig in, like you can create an army of employees as AI agents, and like you can outsource. You're not even outsourcing. You're insourcing through AI tools a lot of the things you would normally be hiring for. So we live in the greatest time ever for like automating a lot of these things and putting systems in place. So what I mean by that, you got like the younger 23-year-old that like is doing some kind of consulting thing, and without his input, the business doesn't exist. Okay. That's what I'm talking about when I say they're like not real businesses. You're a solopreneur, but you don't have these systems in place. So a lot of the younger people that are doing this 3 weeks here, a month here, 2 weeks here, they can do that because their income is really very often what I run into, and I speak at a lot of like digital nomad events. Their income, it's like a lifestyle business. And there's absolutely nothing wrong with that. They live this lifestyle and they make enough money to live that lifestyle, but they're not building like a bigger company where they have these major systems in place and employees, and they're building a company that can be sold, which is kind of the goal for a lot of entrepreneurs, is eventually get to the point where you can sell your company. Well, like I just had a client call before this show with a guy who's exactly that. He does consulting. He doesn't have a business he can sell. If he stops consulting, then the business goes away. But he makes a lot of money. Like he makes good money. He's got some systems in place. So that's kind of the digital nomads on that end of the spectrum. And that would be like a lot of the purest digital nomads would say that's the only definition. I'm on the other end, where I have home bases and I like to go and be in one place. I like to have a routine for a little while. I like to have my gym routine and like the 5 restaurants I go to on a regular basis, and, that kind of thing. Like you could call that like digital slow matting is what some people call it. But there's a range of spectrum on what it means to be a digital nomad also. So when it comes to making mistakes, I think the mistakes on one end of the spectrum are very different on mistakes on the other end of the spectrum. Like on the digital nomad side, like I've seen so many people do this. It's so dumb. They're like, I really think I want to live in Portugal. I'm going to go there and buy a house or buy an apartment. Like, man, you've never even lived in Portugal. Like, calm down. Like, spend some time there first. But I see people do it all the time. But like, I have client calls with people like on my consulting business, and they say, where should I move to? And like, how can I buy property there? I'm like, bro, you've never even been to this country. Like, why are you talking about buying property there? You may hate it. You may hate the food. You can't speak the language. Like, relax. So I think people make that mistake very often. But on the nomading side, I don't even look at it as like mistakes. Like my favorite quotes, and honestly, this is my life philosophy, is you only regret the things you don't do, not the things you do. So from that perspective, I've never made a mistake. I've had learning experiences,
If my husband's listening, same. I have never made a mistake. I'm always right.
Sure.
So I'm just going to put that out there.
Learning experiences.
Well, so question for you, because we're talking about like home buying and all that stuff. Money, like the money side of things is really interesting to me. I know this is like international tax is like a big expertise of yours. Like if people are going overseas or whatnot and are there a little bit longer than like a little stay, like a working staycation for 3 weeks or so, is there like a structuring? I keep going back to the word mistake, but is there a way that they need to be structuring their business so it doesn't cost them? Or like, should they, I mean, what are your thoughts there?
Yeah, so definitely, like you said, to your point, if I'm going to go dip my toe in the water and I'm going to go like spend a month in Spain to see if I like it, no, don't do anything different. You're on vacation. You're on a long vacation, but if you're beyond the point of dipping your toe in the water and you're like, I'm going to sell the house and the cars and like just like sell everything and throw it all in my suitcase and like begin this nomadic journey, then yes, you definitely need to think about the way your business is structured, because from this perspective, now we can talk about mistakes. So one of the biggest mistakes people make when they begin this nomadic journey, full time, again, not dipping the toe in the water, but like diving into the life to live the digital nomad life. One of the biggest mistakes people make is not getting proper advice on how to do that from the business and financial side. Because what normally happens is, let's say you're an American and you want to move abroad. You want to be this digital nomad. You want to go live, Southeast Asia part of the year, Mexico, Colombia, whatever, some of the hot spots. And you say, well, I'm American. I'm just going to keep myself based in the US. I'm from Chicago. I'll just keep my Chicago address and my Chicago driver's license and my Illinois LLC and so on and so forth. And you just keep that connection back to your home base, you call it. Well, it's not even a home base anymore because you've left. But a lot of times people emotionally feel like it's still their home base because that's where they're from. And they just move and are like, I'll just like keep running my business through that Illinois LLC and I'll keep paying taxes in the US and all that stuff. The reason, you can do that. Don't get me wrong. Like that's something that is available. Every country, like you could be German and do the exact same thing. I had tons of Germans who have left Germany, but because they didn't know what to do, they just kept their business registered in Germany and kept themselves registered as a tax resident in Germany, even though it wasn't necessary. But they did it because they didn't know any better and they didn't go get proper advice to do this. Like I've recently had a client from Canada who did this. She makes a lot of money. She makes over $1 million a year, US. And she'd been out of Canada for like almost 10 years. And Canada's tax rate's very high. It's like almost 50%. And so she was paying close to $500,000 a year in tax for the past 10 years. And she could have been paying zero. Goose egg, zeros. Like for 10 years, $500,000 a year For 10 years, she paid $5 million in tax that was completely unnecessary.
So what did she do
they-
instead? Like when she moved over, what are the other options?
I mean, we restructured everything for her. But the point was the mistake she made was not getting the advice early on to get it properly structured. I mean, I even told her, like, when we got on the call, I was like, or we did a series of calls, not one. It takes more than like 1 hour to fix all this stuff. But over a series of calls, I remember telling her one time, I said, listen, I've got really good news for you, and I got some really bad news for you. The good news is we can fix everything and you can pay zero tax. You go, oh my God, that's amazing. I said, the bad news is you paid about $5 million in tax that was completely unnecessary. And that's like nauseating to think, like, you just paid $5 million in tax you didn't have to pay. Like, think about that. You're like, oh God, I feel sick to my stomach, right? Like,
Yeah.
that's a huge chunk of money. So in like her example, she's Canadian, and as a Canadian, you can exit the Canadian tax system. Okay. If you leave Canada, you can exit it. Unlike Americans cannot exit the US tax system. The US is what we call a citizenship-based worldwide tax system. So you pay tax on worldwide income no matter where you live in the world. Americans have other opportunities. There are different loopholes you can take advantage of. There's things like the Foreign Earned Income Exclusion, foreign tax credit, and a few other things. But you're still a tax resident. Whereas Canadians, if they, there's a list of things you got to do. But if you check all the boxes, you can actually exit the Canadian tax system and have no more connection. You no longer file, you no longer pay, nothing. Okay. Once you exit, the important thing is, do you become a tax resident somewhere else? Okay. You don't necessarily have to be a tax resident somewhere. Now that depends on nationality, and there's a timing issue of that. Like, Canadians can easily exit without being a tax resident. If you're Finnish, there's a 4-year tax rule that if you exit the Finnish tax system and you do not become a verified tax resident in another country, you remain a tax resident of Finland for 4 years. Okay. But there's loopholes to get out of that too. It's just a different set of strategies you got to use if you're Finnish. Same with Australians. They got a more complicated system to exit. But most of the world, most nationalities can easily exit their home tax system without being a tax resident somewhere else. The tricky thing is how do you avoid being a tax resident somewhere else, right? Every country has a different set of rules on what it means to be a tax resident in that country. And a lot of it has to do with what they call your center of vital interest. Like, where do you kind of have your home base? So if you're like in this digital nomad lifestyle, it's easy. It's super easy to not have tax residency anywhere. Like, it's ridiculously easy to not have tax residency.
Like, how so? Like, do you have to only stay a certain amount in each place?
Yeah, you just move around. Like, every country has their own set of rules on what it means to be a tax resident in that country. So it takes some strategic planning, and you have to think about, like, okay, I want to spend time in, let's say, Thailand for a few months, and then I want to go to Vietnam for a few months, and then I want to be in Mexico for a few months, and using the Canadian as an example, and I want to spend summertime in Canada. Can I do that? Yes, you can be a zero tax resident in that scenario. Okay, but you got to look at where you're spending time to make sure you don't do things that trigger tax residency in each one of those places. And it's complicated because every country has a different set of rules on what it means to be a tax resident. So, like, there's always I'm convinced there was a blog post written like 15 years ago about this, and everyone uses it as a factual reference point. But everyone talks about, if you're in a country more than 183 days, you're a tax resident. If you're not, you're good. That's not true. It's not true. Like, the 183-day tax residency rule is a bullshit myth. It doesn't exist. I have read the tax residency requirements in probably 140 or 150 countries. I can tell you, so not all 200, but let's say 3/4 of the countries on the planet, I've read the rules on what it means to be a tax resident there. Of the ones I've read, I've only found one country that has a clear 183-day rule for tax residency, and that's Ukraine. That's the only one. Like Spain is an example. Like they have a 183-day tax residency rule as one of their like dozen different criteria it takes to meet like tax residency. For example, in Spain, if you own a home in Spain that's your primary residence, and even if you only spend a month a year in Spain, you're still considered a tax resident. Okay? Doesn't matter how many days you're in the country. However, if you're a tax resident, speaking of Spain now, if you're a tax resident of another country that has a tax treaty with Spain, you can live in Spain all year and not be a tax resident. Right. So the point is, like, if using that Canadian example, if she's going to go, just for like hypothetical example, spend the summer for 3 months in Canada, 3 months in Thailand, 3 months in Vietnam, and 3 months in, I don't know, Portugal, for example. Okay. So that's 12 months, right? Yeah. I think I got all 12. So in that example, she can easily not be a tax resident, but then you got to look at, first of all, Canada. How do you make sure you exit correctly your home tax system? And how do you make sure you don't, by default, become a tax resident again in Canada? Okay. And then you have to look at what are the rules for becoming a tax resident in Portugal and in Thailand and in Vietnam. Did I use Vietnam? Whatever example I used, Vietnam. So you have to look at each one. So you can't just like, I mean, you can. People do it all the time, and they live under the radar and they do it illegally all the time. Like it happens all the time. But if you want to follow the rules and make sure you don't like put yourself in any situation, you need to actually have a proper plan in place to be like, okay, let's make sure I don't become a tax resident in Vietnam. Okay, what are the requirements? Okay, don't do that. Okay, what does it mean to be a tax resident in Thailand? Okay, I don't want to do that. You know what I mean?
So the majority of our audience is US based. For that audience, what would you write if somebody's like, oh man, this guy knows his stuff. I want to do this. What would be like 2 recommendations you have for US based audience to save on taxes if they wanted to
become an expat or nomad? Okay. So as a US person, your main loophole that you have to save on tax money is the Foreign Earned Income Exclusion. You can look up IRS Form 2555. If you look up 2555 with an I at the end, that's the instruction sheet, so you can read all about it on the instruction page, or you can just look at the form 2555. That is the form you file with your tax return if you have foreign income, and you can exclude it from your taxable base. So if you qualify for the Foreign Earned Income Exclusion, or FEIE, so if you qualify for FEIE for last year, 2025, your first $130,000 is tax-free of earned income. Earned income. I'm specifically earned income. So job or your operating business or something like that. Dividends, capital gains, rental income, royalties, interest expense, stuff like that. Those do not qualify for FEIE, only earned income. Okay. So if you're an American and you live abroad and all of your income is from dividends, you don't qualify. You still have to pay tax on dividends in the US. Doesn't matter where you are. You might end up having a situation, if you go move to another country, in that scenario, you move to another country and become a tax resident there, you might be paying tax there, and then you can take advantage of what's called the foreign tax credit. So you pay tax, let's say you move to France and you pay tax there, and then you take that as a credit against what you otherwise would have owed in the US. But you still have to file in both places if you're a tax resident in France. But if you're going to be a digital nomad and you have a solopreneur business, earned income, presumably, you're going to want to take advantage of the Foreign Earned Income Exclusion. So that's $130,000 you can earn tax-free. And I want to clarify the point is it is you that qualify, not your business. So if your business is an LLC in the U.S. with 100% U.S. clients, earning in U.S. dollars, getting paid through Stripe or PayPal in the U.S., you still qualify for foreign earned income exclusion because you, as the human, qualify for that exclusion. Okay. So that's a big question I get. People think, oh, well, all my clients are still in the US. I don't qualify for FEIE. Yes, you do, because you as a person qualified. The other thing is there's a housing allowance that you get, which averages roughly 40, 50 grand a year. And the good thing, like if you have a spouse, let's say, I'm a guy. So let's say I'm a guy and my spouse, let's say she's not working. She stays at home, but I make $300,000 a year. Well, I can pay her $130,000 also because she also gets the 130. So now we went from 130 to 260 tax free. But the housing allowance is per household. If we're obviously living together, then, we would only get that 40 grand total per household. So you can get about 300K ish, tax free if you were married. Or that you have to be married, but like if you were in a domestic partnership or whatever in your household, you can pay that person also. You can also pay your kids, by the way. So you can up that a bit. Although the IRS might look at it a little weird if you got a 7-year-old you're paying $130,000 to for like,
They're so valuable.
Don't do it, Carly. Don't do it, Carly.
I know.
yeah.
I'm like,
It'd be a little weird if you paid your kid 130 grand a year to like empty out your trash cans and mop the floor,
Might be what it took. But
yeah.
That definitely costs
to make
that,
it
that's for sure.
consistent. Well,
Yeah.
Bobby, even within the US alone, aren't there also ways like, can't you, if you're a digital nomad from an RV standpoint in the US, can't you like become a South Dakota resident or something and not have to pay income
Sure.
tax if you're, and like, what are some of the loopholes there within the
So,
country?
so South Dakota is an interesting point. So yes, you can basically move your tax residency to a zero tax state. South Dakota is one option. South Dakota is a common option because South Dakota is the only state where you can get a driver's license and with 1 day stay in the state. So South Dakota, you can move your like let's say you're from California, you can quote move to South Dakota and move your driver's license to South Dakota, and the only proof you need is that you stayed one night in South Dakota and that you have a mailing address in South Dakota. So actually, in one of my companies, Business Anywhere, one of our products is a virtual mailbox offering, and that's the only reason we have a location in South Dakota is for our clients that do that. That's literally the only reason we have a location in South Dakota is for the clients that move their driver's license to South Dakota, because we can provide the mailing address for them to move their driver's license. I have countless clients that have done that in South Dakota. So the benefit there is South Dakota, wait, let's say you're from a high tax state, like, and you're doing the RV thing and you're from a high tax state like California. Well, exit the California tax system. California is incredibly aggressive. And by the way, if you are just going to exit and do the RV thing in the US and you're from California, or you're going to leave the US to be a global nomad and you're going to leave from California, you better do this. You need to exit California no matter what, because I mentioned before the foreign earned income exclusion. We'll come back to that in just a minute, but the foreign earned income exclusion is only at the federal level. California, if you did that, you left California and went to do like Mexico half the year and Argentina half the year, the FEIE is only at the federal level. California, if you still had your driver's license there and an address there, you still have to pay California state tax. They don't care if you actually live there. You just have some paper connection to California and they will chase you 100%. I've had clients that got chased in California and owed a ton of taxes. They hadn't lived in California for years, but because they didn't move their driver's license out and their addresses out, California is like, nah, you still have a driver's license and address here. We still think you want to come back. That's kind of their mindset. Actually, their mindset is we just want your tax money, but that's their excuse for the mindset. So if you're going to do the RV thing around the country or leave the US, either way, and you're from California, the initial step is the same thing. Move your driver's license move your address, change everything in public record to a non-California connection, and exit that state. And South Dakota is a good option for that because you can move your driver's license with a one-day stay. Now, what makes South Dakota a little bit tricky is South Dakota, they crack down on South Dakota, by the way. So this is where it makes it a little bit tricky. But South Dakota is completely fine if you have your own business, you're a freelancer, you're a solopreneur, you run a company, whatever, it's completely fine. But if you have a remote job, South Dakota does not really work, because if you move your residency there for the purpose of getting a driver's license, but you don't actually have that physical connection there, you cannot use South Dakota as your state of residence for employment. They will reject it. That's only happened in the past couple of years. They will not allow that. And your home state will look at that and see, oh, well, you don't actually live in South Dakota, so we're pulling you back into our state from a payroll tax perspective. So if you have like a remote job, you're a W-2 person, South Dakota doesn't work. But
Which I don't think anybody in this show is.
I'm just making a point for anybody
Yeah.
listening, just in case. But if
No,
you're
I
a
appreciate it.
solopreneur, South Dakota is great. Like, because it's your business. You can just have, you don't have to have any, you don't have to have an LLC in South Dakota. You can have a Florida or a Wyoming or Nevada LLC. It doesn't matter. But you need that driver's license and that address in South Dakota to have that connection. I want to jump back to FEIE real quick, because to qualify for FEIE, there's two ways to qualify. The first one is you have to physically be outside of the U.S. 330 days in a 12-month period. Physically out of the country, and that includes transit days. So you have, and they're pretty strict on this. So you have to be a maximum of 35 days in the U.S., including transit days. So that's a little restrictive for a lot of people. They're like, yeah, but what if grandma gets sick and I need to come take care of grandma for a couple of months or something? So that's the one way to qualify. That's called the physical presence test. The other way to qualify, which I believe is a much better option, but it involves jumping through more hoops, is called the bona fide residency test. And that means actually legally immigrating to another country and getting a residence permit or a residence visa or something in the other country. If you do that, if you go qualify for bona fide residency in this other country, now you don't have that 35-day limitation in the U.S. Actually, it's way more subjective. I could even show you the IRS page on that. And the words are, your connection to that other country is based on your intention about your length and nature of stay in that other country. It's all subjective words. There's no hard determination on how many days you need to be there or here or whatever. It's just about your, what they call your center of vital interest, or your connection to that place and your center of vital interest and connection to the U.S. So I think going and getting residency in another country is a much better option because it gives you a lot more flexibility, and it's easier. But choose wisely. Like, don't choose Denmark, like one of the highest tax countries on earth. Like, don't do that. Like, you want to choose a country that either is what we call a residency-based territorial tax system, meaning you only pay tax in that country if you earn income within that territory. Like Costa Rica is an example of that. They're a residency-based territorial tax system. Or you can choose, this is more expensive, so more for higher net worth people, that you could go get residency in a place like Cayman Islands, which has zero tax. But it's a lot more expensive to get residency in those places like Cayman and BVI. And the other option is you get residency in a country where it's difficult to actually fulfill the requirements to become a tax resident of that country. So like Mexico is a good example of that, because Mexico has a lot of loopholes protecting especially like Canadians and American snowbirds who come down to Mexico, and they don't want to like force them into a tax trap in Mexico, because then it might disincentivize them to come down to Mexico and buy like vacation properties and stuff. So Mexico has a lot of loopholes. You can be a resident without actually having a tax obligation because it's difficult to become a tax resident there. Yet there's a list of things you have to do to become a tax resident. So you got to be careful if you're going to go the bona fide residency route, which country you choose to get residency in, because you don't want to trade like high tax for higher tax. You know what I mean? So
Bobby, I feel like we need a part 2 because I can talk to you about this stuff forever and it's so helpful, but I want to be respectful of your time. I feel like this is a good place to start wrapping things up, but this has been so helpful. We always end the show with our guests giving their favorite quote about success. You already said yours. Can you repeat it from earlier unless you want to say a different one?
Well, that's not exactly my quote about success. That's my life philosophy. My life philosophy is that's my life philosophy. You never regret the things, excuse me, you never regret the things you do. You only regret the things you don't do. That's a life philosophy. That could be about business. Like that could be, hey, I regret not starting that company. I regret not making that investment. It could also be, I regret not kissing that girl, right? Like it can be like a whole range of like things. And so my life philosophy is I don't do that. Like if there's something I want to do, I do it because I don't want to have regret about it later. So I just do it. Like, and that's kind of the live in the moment, like kind of philosophy a little bit. I'm not Buddhist, but this kind of the Buddhist philosophy that, you know, we live in the moment, and today is what we have, right? So that's more of a life philosophy. Probably my favorite success quote is, you only fail when you quit. Like that's my, like, because as entrepreneurs, like literally we fail all the time. But if like we launch a business and it fails and we quit, like, yeah, we're done. That's it. If we launch a business and nobody likes the product and we tweak it and we tweak it again and we tweak it again and now people want to buy it, well, we didn't quit. We kept going and eventually we got there. You know, I mean, that has to be obviously with some limits. If your business idea is to start a business making horse carriages, it's probably not a great business model to get into these days.
I'm not sure. Like my millennial kids are into vinyl records,
Sure.
cassette tapes.
Retro stuff is coming back.
Yeah.
That's for sure.
Film cameras. Yeah. So maybe buggies is actually a good business.
Yeah. Maybe we could get back. That's what we need, Joe. We could go back into the horse and buggy business.
Well, Bobby, this has been, like I said, so fascinating. Where can people learn more about you, your businesses, everything?
So our consulting business, so we work with, like from the consulting side, we work predominantly with location independent entrepreneurs who either live outside of their home country or have business outside of their home country or like investments or something like that. And then we do like strategic planning and consulting on like company structure, tax planning, asset protection, residency planning, stuff like that. So that business is globalwealthprotection.com. And then my other business, which is kind of my main focus, like Global Wealth Protection, we do still take clients, but we don't promote it. We don't market it. We run zero ads. We do zero promotion of that business. Like that only comes either through like referrals, or maybe I mention it on a podcast like this. The business we actually focus on is businessanywhere.io. And we are a registered agent in the U.S. We cover all 50 states plus the territories. We do company formation. We have virtual mailbox service. We facilitate a lot of other things within our platform. We're basically like a software business, like a SaaS business. So you can open like bank accounts in our platform. You can set up your bookkeeping, tax filings, virtual phone numbers, register trademarks, all the company compliance. Our system is built, like, I'm very adamant about entrepreneurship. I live, breathe, eat. Everything for me is entrepreneurship. I've never had a job. I don't even have friends that had jobs. Like literally, I don't know anybody that has a job. And all my clients are entrepreneurs. And so I'm very passionate about entrepreneurship. And Business Anywhere is a platform to make the tedious things in your business easy and automated. Like we automate all your compliance, for example. And what does every entrepreneur hate? Paperwork, compliance, legal issues. We all hate that stuff, right? Entrepreneurs, all we ever want to do is the next sale, the next hire, the next deal, the next trade show, the next product launch. And somebody says, you need to clean up your bookkeeping. You're like, gross. Like you don't want to do
Yes.
that.
Yes.
Yeah, sure. You're right. I probably tomorrow, next week. So our platform is built around making those tedious tasks for entrepreneurs easy, simplified, and much of it automated. So that's, and like if you're a plumber from New Jersey, you can certainly register an LLC with us, but we're more like, our message is more towards like location independent entrepreneurs.
Sure. Oh, Bobby, so cool. Thank you so much for coming on the show today. I think this information is just so invaluable, and so few people know how to do all of it correctly. So thank you so much for being here.
Thanks for having me, Carly. Thanks, Joe.
And listeners, thank you so much for tuning in. As always, leave that 5-star review. Help spread the word to other people that want to be digital nomads in whatever way that is for them, because they'll need this information. Subscribe to the show on your favorite podcast platform, including YouTube. And again, share this episode with a friend, and we'll see you next week on The Aspiring Solopreneur.